Good afternoon. Welcome to our RaboResearch Food and Ag Reports on Brownfield. I'm news anchor reporter Megan Grebner. With us is Don Close, Vice President of Food and Ag Research in Animal Protein with Rabo. Good afternoon.
Good afternoon.
Don, as we get into the markets, and we're going to talk a lot about the livestock side of things and what's going on there, let's start first and talk a little bit about what's been going on in the cattle markets, because we've seen a run up a little bit in those.
The whole rally that the markets had since the lows we had in October, we lasted through the year end. The market continued to rally, with some exceptions, but we're in cattle feeding areas. We really haven't had any severe weather complications to speak of, particularly compared to a year ago. And even with that, movement of cattle has been extremely good. Average carcass weights have been, currently 15 pounds below a year ago, keeping that total tonnage very manageable. It's been a phenomenal market.
As we take a closer look at what's going on, let's talk about some of those factors that are keeping farmers' profitability. I think about maybe input prices. Is that playing a role in how that market's looking as well?
Oh, absolutely. The grain prices. We're still sitting here with projected ending stocks on corn on top of that 2 billion bushel level. We'll have the acreage confirmation coming out here on Friday, but still looking at very abundant and very comfortable feed grain supplies, both for all of this year and in all likelihood for all of next year.
Let's talk a little bit about some of the markets in general. We talk about fed cattle, but as we look ahead and look at maybe the futures markets as well, are we still seeing continued price support in those areas?
Well, we're really seeing a mixed bag. Fed cattle prices, as we referenced early on, phenomenal. We've gone from the $97 low in October, and here last week we were seeing fed cattle prices in that range of 130 to 135. The profit opportunity for cattle feeders currently, cattle closing out with profits something in the $250 to $350 a head level, certainly giving them the opportunity to catch up a lot of lost ground that they suffered through the fall. While that's true on cash cattle prices, futures prices have been trading at a substantial discount. We've sitting here with basis levels from $7 to $19 in some of the deferred contracts. So the futures market, in its anticipatory role, looking at not only increased supplies of cattle coming into the market here in the very near future, but it's also looking at the projected 5% increase in pork production for the year. We're looking at a 2.5%, possibly 3% increase in broiler production. So the broader market sees a lot of meat coming for the remainder, the second half, specifically the second half of the year. That basis discrepancy, while it is a great favor to hedgers that are liquidating positions as they sell fat cattle at better than expected prices, it's really putting a damper on the ability to buy replacement cattle at price levels that will hedge against those deep discounts in the deferred futures live cattle contracts. So it's a short-term blessing, but a long-term curse, and a real difficulty that the market's going to have to work through in a very short period of time.
I would have to think that demand plays a big role in not only short-term price support, but long-term price support as we look at more cattle potentially down the road. As we look at that, what are some of those key factors that play a role in demand?
I think we've seen two positive effects, both in the domestic market and with the international trade. In the domestic market, we saw a really good movement of beef from last summer, it continued into the fall. It continued through the winter period. We've never really seen that seasonal slowdown in demand. We look for explanation of why that's been so. I think the big driver there is whether we still want to refer to it as the Trump bump or not, but there's just a stronger, a more positive sentiment, market sentiment. Consumers have more confidence, they're more willing to spend money, and that has clearly shown up at the meat counter. So that partially explains the domestic market. The other one that we've seen is our export pace year to date is continuing to hold an incredibly strong level. And those increase in shipments include Mexico, that includes Japan. It's put us in the largest supplier category for South Korea. So we're really seeing the big driver, even if we were to say an unexpected surprise in this market, has been that strength in exports.
When we look at the demand side of things and we see both the domestic and the international or the export market demand, do they both play an equal role in price support for livestock producers here in the U.S.?
No, they don't. In the beef side, the U.S. on an annualized basis, the U.S. has never exceeded 10% of production going to exports. So if we have 90% of consumption domestically, 10% going to exports, clearly the domestic market is the one that carries the big weight. But at the same time, that 10% of exports, that's that economic balance that puts that demand base above and beyond. So while the tonnage discrepancy is certainly there, the impact of exports very, very strong.
Let's talk a little bit about trade rhetoric. You mentioned the Trump bump, but there's also been some pretty contentious conversations about trade. How important is it for us to figure out these trade agreements and make sure that they work for livestock producers here in the U.S.?
Yes. And I think we could hone in real quick. What you're talking there is the uncertainty with NAFTA. And the big answer is we don't know. We don't know. From what I was seeing earlier today, it looks like the confirmation hearing for Sonny Perdue will take place by Friday, or hope so by Friday. If we could get a secretary in place, it would certainly get us headed in the positive direction on figuring out where we stand with ag policy, export policy with this new administration. Right now, we don't know. Now, if you take some of the comments that have been made, some of the early negotiations, you're already seeing the concerns of the market start to soften, that any renewed negotiations or NAFTA 2 talks that they're hoping to get underway and even completed this year. While that's really an aggressive goal, but you're already seeing some of the fears in those talks start to ease from what they were immediately following the election.
Any other areas that we need to think about to watch as it relates to trade and ultimately demand for our producers here at home?
Well, and we talked just a bit about NAFTA and thinking, okay, let's look at that probably won't be as bad as what the fears were. The other big unknown that we didn't talk about was the U.S. backing away entirely from the TransPacific Partnership, and where does that leave us with negotiations in Asia? You've got the Chinese premier or Chinese ambassador going to meet with Trump here in just a matter of days, and what's the possibility of finally getting access of U.S. beef into China? A lot of the support in the export trade to Asia has not only been from lower wholesale beef prices and larger supplies in the United States, but it's also been driven that Australia is still looking at radically reduced supplies of total beef availability as they come out of the drought and they start to go into herd rebuilding. So a lot of the benefits that we have seen with our export schedule late through 2016 and certainly year to date, not only are we in a stronger position with supplies, but we're also offsetting or competing against Australia, who's got substantially shorter supplies. So we're getting a benefit there. The whole Trans-Pacific thing, you know, and how will the U.S. be able to negotiate a whole string of bilateral trade agreements? That's going to be a pretty big hurdle. It's a big hurdle.
And that has more long-term implications, correct, for demand for U.S.?
Absolutely. All of those uncertainties with those are all long-term situations. We've clearly seen with the short-term effects, we're getting along real well. But if we have the stability of knowing exactly where those trade relationships or trade agreements stood, it would certainly give a level of security or confidence to the long-term market.
As we look at the markets in general, there's been a lot of outside noise in the last couple of weeks. Let's talk about those as a whole first and some of the influences that we've seen, and then we'll get into some of the nitty-gritty and the details on those.
Okay. You know, we've already touched a bit on trade relationships and trade agreements, NAFTA and TPP. That's causing noise in the marketplace. We've got the ramifications and impacts from the avian influenza that has been a huge issue in Asia, you know, even to the extent of having 100, and I don't know what the last count is, but well over 100 human deaths in relationship to the wet markets in poultry. Europe's had big complications with avian flu this year, and they were in the last, you know, 4 weeks. We've finally started to see some avian influenza cases in the U.S. That's causing a level of uncertainty. You've got the situation of the last 2 weeks and the inspection problems and the concerns of the tainted meat issues from Brazil. Obviously, that caused real shock waves to go through the system, and looks like that's finally getting resolved relatively quick. The other one is the impact of the fires that we had through the Central Plains and burning off better than 2 million acres. The cattle count, we still don't have a full count on, but all of those issues, we've gotten along really quite well as far in terms of market disruptions. But any one of those issues, if they went to an extreme, could really be market long-term damaging to the marketplace. So we can say there's a lot of noise in the marketplace from a whole host of issues, or just a whole host of landmines out there that so far we've really done a good job of stepping around.
Let's talk, we'll get into avian influenza and some of the impacts there, but I want to talk a little bit about the Brazil issue. As you look at, China has not imported beef from the U.S. since 2003-ish, correct?
2003.
Could part of their decision have been because they didn't have a lot of options to get beef? They're not taking it from the U.S. There's a shortage of beef in Australia because of their drought situation. I think similar to what U.S. producers went through after the drought of 2012. Does that play into it? And does that also create maybe side opportunities for U.S. beef to enter some markets they haven't been in before?
Yes, and as we've talked with our Rabo analysts globally through the year, not only are you seeing this growth in the middle class in China and the increased beef demand, both for home use and restaurant sales. But they really had a severe drought in Mongolia this past summer, and that's their premier cattle production area. So not only, they've been limited with domestic supplies as well as the disruption in supplies from Australia. So yes, it has put them in a more, and the blockade of trade with the U.S. that I think we could probably say is way more political than it is science-based. It has put them in a bit of an awkward position that has probably led to them finding solutions to the Brazilian issue quicker than might otherwise have been the case. And that, let's keep in mind, I've seen the numbers, but if they come to mind, there's better than 4,000 processing facilities in Brazil, and we're talking complication problems with 23 facilities. And I think that maybe that's grown to 26. But and if you put it in context, it's still a very small issue when you look at the overall trade volume.
Let's talk a little bit about the avian influenza impact. As we look at it and we see, you mentioned about being able to step around some landmines there. If we see bans of U.S. poultry exports into certain countries, does that potentially, obviously puts more poultry or more poultry on the market for us, but does that have a trickle-down effect to some of the other proteins?
Without question. And of all of these landmines that we have talked about, the one that potentially has could hold the most damage to the U.S. domestic market would be a widespread outbreak of the avian influenza. And it's not that the number of birds involved in the this elimination, but if we're exporting 16 to 18% of U.S. broiler production is exported, we lose a lion's share of that export avenues, and that product now stays on shore. The mushrooming effect that it has on total protein supplies domestically, that's the real threat with the whole situation.
And that also, if we see lower prices at the meat counter for poultry or for chicken products, consumers, while they might be more confident, are still going to probably opt for that cheaper protein.
They're going to go to the cheaper protein, and it will have a carryover effect to all species. Now, one thing that is different today than what we have seen in years past, as not only the U.S. but all both export and import countries have become increasingly dependent on international trade. If you think back years ago, and you referenced the BSE event in 2003 early on, that was a whole country blockade. The Canadian BSE event and the absolute disaster that turned out to be. But all of those trading countries have changed policy over time, that instead of going to a whole country blockade, we're seeing more and more state-specific blockades, or even drill down to a county level blockade. And that's a way smarter way to handle that trade. And what that enables us to do is continue to see, it might cause inconveniences, it might cause a lot of uncertainty in the marketplace, but it doesn't cause a complete shutdown of the market, and it enables commerce to continue.
Don, we've covered a lot of great and interesting topics today. Ultimately, I think it should leave consumers right now feeling pretty good about the short term.
I think consumers should, and I think their behavior with their pocketbooks are showing that they are enthusiastic in the protein space. We're just now, at the 1st of April. We've got a late Easter this year. Typically we really don't start those spring grilling ads in earnest until we get the ham and lamb features out of the way. So we still have that spring opening of that spring grilling season ahead of us. And while we're expecting to see larger cattle supplies ahead of us, we still have our peak, the full head on with our peak usage season ahead of us as well. So yeah, we're going to see more cattle, and the likelihood that we're at or very close to our spring high in fed cattle prices, we still have a really solid footing under this market as we head into the spring and early summer.
And that's good news for our livestock producers here.
Very good news.
Don, thank you for joining us.
You're welcome.
Don Close with Rabo, the Vice President of Food and Ag Research in Animal Proteins. Thank you for joining us for our RaboResearch Food and Ag Report. I'm Megan Grebner on Brownfield.